Are you wondering whether you should buy an investment property through a corporation or your personal name? There's pros and cons for each structure, so it's not a one-size-fits-all answer for everyone. Besides returns, there can be other factors that might be important to you, like liability or privacy. In this video, I'll break down the key differences between each structure so that you can decide which is better for you. Before we continue, please remember to subscribe to our channel and hit the notification bell so you don't miss other real estate investing videos like this from our Elevate team. The first thing you need to think about are costs. When you purchase a property with a corporation, you have higher startup costs and higher ongoing costs. Startup costs includes things like incorporation fees, which cost $360 in Ontario. And if you go with a named company, you'll also have to pay a name search fee, which is around $40 in Ontario. And right now we're in 2020. Even though you can incorporate a company on your own, we recommend getting it done professionally with a lawyer or an accountant to avoid potentially costly mistakes. These professional fees can be in the range of $1,500, plus you also have to factor in the time to get all the paperwork done and set up things like bank accounts. We also have ongoing costs, and the big one here is that at the end of each fiscal year, you'll have to create a separate tax return for your corporation. Again, this will be more work for you, and this is around another $1,500 per year if you go with a professional. The next thing we'll talk about are income taxes. Just as a heads up, we're not accountants and we're passing this information on from our accountants. We always recommend that you check with your own accountant to verify this information yourself. Typically, real estate investments are not considered small business active income. So this means that they are taxed at the highest rate of 50.17% for 2020. The only way for you to get that lower active income tax rate of 12.2% is if your investment portfolio gets big enough and you can hire at least 5 full-time employees throughout the year in the rental business. When this happens, then it becomes a lot more attractive to invest as a corporation. If you invest under your personal name, then you'll be taxed at your individual marginal tax rates based on your total income, and this might be lower than that highest corporate tax rate. And if your rental property has losses in that year, then you can deduct it against other personal investment and employment income. Let's talk about mortgages next. It's always easiest and fastest to get a mortgage under your personal name. You can usually qualify for a lower down payment and better rates compared to corporate mortgages. The negative here is that banks will look at your total debt when offering you new loans, so getting a personal mortgage might affect your ability to scale your real estate portfolio, especially when your properties don't cash flow well. On the other hand, a corporate mortgage can increase your total borrowing capacity if you set it up properly. One downside is that a corporate mortgage is more complicated and will take more time. You typically need to provide a lot more paperwork and personally guarantee the mortgage. Plus, many banks have harder qualifiers for mortgages, which means extra covenants, higher debt service ratios, higher down payments, and higher interest rates. And these will all affect your total returns once you factor in leverage and expenses. The fourth thing to consider are liabilities. If your corporation requires a personal guarantee with the banks, then your personal assets are not shielded from either structure. But if your established corporation doesn't require a personal guarantee, then a corporate mortgage does offer more protection from creditors. Another thing I wanted to talk about are penalties for gross negligence. If you are convicted of an offense under the Residential Tenancies Act, then the maximum penalty for 2020 under a corporation is much higher at $100,000 compared to a lower $25,000 penalty for an individual. Finally, let's talk about privacy. If someone wants to look up your assets, then they can run a title search on you since it's public information. As a corporation, there is less transparency of ownership since the search results will only disclose the corporation name. You can also get more privacy in your landlord-tenant relationship if you want to, since your lease will only show your corporation's name as the landlord. So these are 5 main factors to think about when deciding whether to buy an investment property with a corporation or under your personal name. The answer is not the same for everyone, and there are some factors that can vary significantly depending on your unique situation. If you want to learn more about what's right for you, feel free to connect with us and we'd be happy to point you to accounting and legal professionals if you need it as well. You can reach us by heading to the link I'll put in the description below. Finally, if you find this video useful, please give us a thumbs up and help us out by sharing it on your social media and tag us at Elevate Realty CA. I wish you all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.